Hey, what's going on, traders? It's your boy Mark Easy, aka the DJ Daytrader. That's right. It is time for a brand new segment for my channel. It is time for That's right, brand new segment we call TNT, that tips and tools. And today's tips and tools will be day trading options on Tesla. That's right, we all know Tesla's been on a rip lately, trying to hit that $500 mark. Not quite there yet, couldn't quite make the cut, but it's definitely been having a lot of volatility, a lot of opportunities to trade and make some money. And on Friday I decided to trade some Tesla puts, and I'm gonna break down my trade, the good, the bad, and the ugly. So let's get into the breakdown of my trading options on Tesla this past Friday. So let's go to the charts and check it out. Now, as you can see, this is the intraday chart for Tesla on Friday. What I usually do is wait 15 minutes and put my fib retracement on that 15-minute. So this green line would be the top of the 15-minute, red would be the bottom of the 15-minute range, and this yellow, of course, would be the 50% retracement, always the golden line when you see my charting. So after this first 15 minutes, I got this range for Tesla, and I was kind of bearish on it. So what I wanted to do was wait till it tested this 50% retracement. It was below the VWAP. So at 725, I figured it was below the VWAP, and it looked like it wanted to break down. So I took an entry here. The contract was $1.65. So I took my first entry there, and it did break down. If you're looking at it right now, this is the equities chart, and this is the options actually contract chart. So you can see I took the 475 puts that expired on Friday, day of. So at right here, 725. So let's look at the chart here on Tesla for Friday. 725 would be right here. I circled the entry. 725. You can see I entered, and the price was right here, about 165. If you look to the right side, you can see on the chart 165. So this is where I entered. This candle right here, $1.65, and it might get a little confusing because you can see as the price goes up, the price will go down on the contract because I'm buying a put. So it's kind of like the opposite. So if the price goes up on the equity, the price will go down on the contract, as you can see here. So just kind of briefly explaining how the charting works on this. So as like I said, here at 725, I bought a put at $1.65. It did break down a little bit. As you can see, the contract probably went up to maybe about $2. So I was maybe up like 40 bucks, which I should have just took it off, but I had a longer term vision, and it actually went against me, and it tested the VWAP right here. So this is 741. So if you follow along here at 741 right here, this contract was now, that I bought at $1.65, was now worth about a low of 80 cents. But I bought another one there thinking it was gonna fail the VWAP. So I'm thinking, okay, let me add a contract here. Reasoning being is because I bought the contract for $1.65. The contracts here are trading at about $1. So I'm already 60 bucks in the hole on this contract. So I'm thinking, if I buy one for $1, I bought this one at 160, my average will be 130. So not too bad. All I need is this to move a little bit in this direction, and the contract's 30 cents, and I'll be in the money, right? So I buy another contract here, and then once it breaks below the VWAP, for some strange reason, I decided to add in 2 more contracts. And I never trade really more than 2 contracts, but for some reason, I decided to add in 2. Logic being that my average is 130 here. So if I buy another 2 contracts here at the same price, about $1, my average will be 115, and all I need is the contracts to move 15 cents, and I'll be in the money, right? Right, exactly. But what happens here? It breaks below the VWAP, and then boom, shoots all the way back up here to this 482.40 at about 748. So within 5 minutes. And as you can see here on the charting below, from here, my entry 742, I'm averaged at about $1.15. this thing to 748, goes down to a low of 59 cents. So my average is 115. This thing pops up like this. These contracts drop like this. So now I'm down about, let's say 55 cents per contract. So about $220 I'm down. And I should have took it off already because that's definitely beyond my daily limit. But at this point, I'm just holding on for dear life because that's what we do when stuff goes against us. We hope and we pray. So at this point, I'm just thinking, I already broke my limit of my max loss. So what have I got to lose at this point? If this thing breaks above this 482.40, I'll just get out and just take the loss like a man and just take the beating, right? So this thing decides to just kind of chop around, and comes back down. And this is the thing right here with, and this is the difference between trading equities and trading options, is the fact that time, I believe it's the theta possibly, this time will kill you. This consolidation time will eat you up because these contracts were worth, let's say here at 748 when I entered, 748 at the highest point here at 482.40, 748, this contract was worth 59 cents. So we come down here to 825. Let's find similar. Then mark it off 825. Right here, 825. This contract is at about 481, anywhere from 481 to 480.80. So this thing is about $1.50 lower in price. So that means I should be up, right? Because as this stock goes down, my contract could go up because it's a put. But you can see at 825, this contract is trading lower. This contract is trading at 51 cents. So it's actually trading lower, but the underlying stock is actually $1 in my favor. So you think I would be up on the contract, but no. Because of the time it took to get here, almost 40 minutes, and because this contract expired the same day, that this time just eats away on your contract. Because basically this is saying the underlying needs to be at 475 to be in the money by the end of the day, or this is going to be worthless. This contract will expire worthless. So that's why the consolidation just kind of eats you up. So that's something you got to understand. That's why usually when I trade, I just trade boom into momentum because the contracts explode and I just get out. But when you get stuck in this consolidation, it's the worst feeling in the world, especially with options. But anyways, that's just a little tip right there. So anyways, finally this thing goes into my favor and breaks down below VWAP, breaks down below this 50% retracement. And right here at 842, I decide to take off these contracts for some strange reason at $1.25. Now, my average is 115. So basically, I'm only making 10 cents per contract. So I'm taking 2 contracts off with 10 cents gain. So I make 20 bucks. Why? Because psychologically, my mind is bent. Because here I'm down $250. So as soon as I see the slightest bit of green, 20 bucks, boom, I take off half the contracts, 2 contracts. Why? I waited all this time for the stock to go in my favor down. And as soon as I get a little bit of green on the contract, boom, I take it off. Just psychologically, you just want to protect your profits. You were down 200. I mean, I was down 200. So I do not want this thing to pop up. Time is against me because of the contracts possibly expiring worthless. So I'm just like, okay, let me just take 20 bucks. Then this thing pops up a little bit and I take another contract off here at $1.32. So I make 20 bucks off these 2 contracts. I make $17 off this contract. So I'm up a measly $37. And the next thing you know, what do? I set my stop loss at 125 because I'm thinking I don't want to go backwards on the contract. So I don't want to lose money on my last contract. I'm at 115. So if I put it at 125, at least I'll make $10 off the contract. So what does it do? It consolidates and it kind of pops up here and then it stops me out at 125 here at 853. So 853. right here, comes back down. This candle right here, boom, stops me out at this $1.25. So I'm out. So I made $20, $30, $47 on this trade. $47. Why? Because I said psychologically I was down 200, and as soon as I get a little bit green, I just want to take it off, take my profits. Did this chart tell me to get out of this contract? No. It's consolidating here. It finally make this one move down. So the trend is changing. It's going to a downtrend. And it's below this 50% retracement. It comes back up. It never breaks it. This candle is still kind of dope. The next thing you know, what does it do? Boom. It does exactly what I wanted to do. But guess what, buddy? I'm already out of the trade. So it breaks down. Originally, I wanted to get from this 50% retracement down to the bottom of the 15-minute range at 473.70. It comes down to about 474.05. So maybe like 30, 40 cents away. And what happens to these contracts at that point? Boom. This thing explodes from $1.25 where it stops me out all the way to 283, 284, 280 something. So at this point, if I held through all this, best case scenario, 115 was my average, 280. So say I would be up $1.60 per contract times 4. So that would be 400, about $640 I could have made on this trade if I held it. Realistically, I should have probably sold into the $2 mark. I probably sell half the contract, so that would be, you know, I make $60, $70 on that. So that's 150, and the other two I would sell up here for, like I said, for another $300. So I could have made realistic about $400 on the trade, which is great. But what did I make? $47. Why? Because I wasn't trading the charts. They always say that trade the charts, not the P&L. And I was trading, even though I wasn't looking at the P&L all the time. But as soon as I turned green, I knew I was green. I just took it off because I was so far behind on it that any sight of green, I just like, let me just take it off. I did not trade the charts, and that was a big mistake, and it cost me a couple $100 that I could have made. And you know, I broke my rules. I held beyond my max loss, but I would have took it off. At this point, I already knew I held beyond my max loss. So if it broke above this area, I was just going to sell it. But like I said, the consolidation on contracts will kill you because of the time, the theta, the decay, just sitting here, like I said. So the contracts, like I said, contracts here were worth less than when they were up here, even though the underlying is trading lower. And then, like I said, any sign of green just psychologically mind fucks you, and you just want to take it. Well, not everybody, for me. And that's something I gotta learn, is just to trade the charts. And then, of course, once you're out, this thing goes in your favor, exactly where you want it to go without you. Lots of lesson learned trading Tesla on Friday, and I hope by sharing with you, you guys learned a little bit from my mistakes, a little bit how to day trade options. I'll make some more videos on how to day trade options, or what to consider, like as far as the strike price, the strike dates, the delta, and all that stuff that goes into day trading. I have a simple momentum strategy that I trade. Obviously, I didn't trade it correctly this day, but I'm willing to share with you guys, and I'll definitely put that in my next video. So there you go. That was day trading options on Tesla on Friday. Whew, that was, like I said, I got spanked. There's a lot of lessons learned. It was a green trade, but should have been a lot more green, and I shouldn't have been holding that long. But like I said, every day is a lesson. The market will teach you, and you know, I'm not afraid to put my mistakes out there for you. So definitely want to help everybody out on that. Now, don't forget, it takes a lot to put these videos together, and all I ask you guys in return, just help me out with those YouTube algos. That's right. Like the videos, subscribe to the channel, also hit the bell notification anytime I put up some new content, some new videos. You'll be right there with me, definitely. Also, I got a link to make a donation if you find value in my videos. Feel free to donate if you make some money off the trades. Hey, drop me $1 or $2, $5, $20, $100, whatever you feel is right for you. It's all good. Well, that's gonna wrap up the first lesson on my tips and tools segment. Mark Easy, aka the DJ Daytrader. Time for me to bounce on out the door, reminding you to plan your trade your plan, and stay green. You know what I mean? Till next time, aloha.